Alright guys, in this video I'm going to tell you why VOO, Vanguard's 500 Index Fund ETF, is the best S&P 500 fund out there. So let's go over it. Let's go over the overview. Right away off the bat, you are buying the benchmark of success, what everybody compares their funds to. You can see that it costs $490 a share, but don't worry about that. You can buy fractional shares if you only have $50 a week, $50 a month. You can buy fractional shares. Looking at the gross expense ratio, it is only 0.03%, which is next to nothing. Looking at the chart here, you can see on the max chart, it is trading at all-time highs at 492 at the time of this recording, but it's been nice bullish trend over time through all the years. S&P 500 has been around forever, and everybody compares it. Let's break it down a little bit to see why it's so successful. You can see here the ETF is US equity only. It's passively managed. That's why you have those low fees at 0.03%. And it's a large blend. It holds a total of 507 companies, with the top 10 making up 32.46% and the remaining making up 67.54%. You have companies like Microsoft, Apple, Nvidia, Amazon, Google, Meta, more Google, Berkshire, Eli Lilly, and Broadcom. What you know is they are all within North America, and it is giant, large cap, medium, small, and no micro within this. When you look at the blend here, the style map is growth and large, and information technology makes up the biggest sector, which does for most funds if they're looking for growth, because technology has definitely been on a tear for the last 10 years at 29.15%. Financials at 13%, healthcare at 12%, consumer discretionary at 10%, and take a snapshot of this if you want to see it. Next, you have the industry exposure. Software is 10%, semiconductors 10%, interactive media services. At the end of this video, I'm going to show you a video that if you want to be specific to semiconductors, this is a good fund to choose, and I will post it at the end. Next, let's look at the distribution expenses. The yield is 1.32%, while the gross expense ratio is only 0.03%, so low fees, and you get a divvy every single quarter, which is every 3 months. So you can see quarter 2 at Q2, quarter 3, Q4, Q1, QT, and then it just goes on and on. Next, ratings and analysis, as you can see here, 5 stars out of 1289, 10-year, 5 stars out of 887. What really stands out is the consistency of this. So looking at the performance, if you bought $10,000 in 2013, your $10,000 would be worth $35,000 right now. What does that really mean in percentages? That means over 10 years, you average 12.65%. Everybody talks about making 7 to 8%. All you had to do is put your money in the S&P and you were making 12% a year. That's excellent. If you did a shorter time frame in the 5 year, just 5 years ago, you'd be making 15% a year on average. And now the life of the fund is up 14%. That is excellent returns. Absolutely excellent. That's what you're looking for. And all you're doing is buying the S&P 500. You're not buying any fancy index fund or ETF. And that's why the S&P 500 is the staple of everybody's portfolio. So here's VOO compared to its competitors, ETFs that own the SPY. And they're all going to be very similar here because this is the S&P 500, except the expense ratio. So you can see here there is SPY that trades. It's another S&P 500 ETF that's day traded a lot. That is 0.09%. It has more liquidity. And as you can see, the reason is look how much more money it has, 553 billion versus 454 billion. So VOO is more of a buy and hold long term, buy every single week and don't even think about it. That's usually people's plans. Next, statistics. Institutional ownership, 63%. And then you could just see, I just want to show you the key statistics. It's an ETF, open-ended investment company, and it's by Vanguard Group. And look at the portfolio fundamentals. VOO is 0.03% versus the equity mean of other funds is 0.39 expense ratio. So VOO is just crushing it when it comes to comparing the numbers, even the dividend 1.3%. And when you're getting that 12% return lifetime, that is excellent. So I want to bring up this fund because it's so simple and it works. and you could easily just buy it every single week, buy a couple dollars, and just hold it over 30 years. And statistics show that you will be profitable. And if you want to do that automatically, you could just go under automatic investments. So you just type in automatic up here. I'll post this video too. And then this is the fidelity where you are able to do your scheduled transfers, and you just manage your scheduled transfers. You just click here. If you like what you see, guys, check out my channel over here. I have a Fidelity Index Funds and ETF playlist where these are all my videos. Look for the ticker symbols, look for the names. You could even take a snapshot of them. But check out the Semiconductors Index Fund. This one is done awesome over 10 years. And then how to set up your automatic investments is right here in this video as well. So definitely check them out. I'll post them at the end of the video too as well. All right, thanks for tuning in.